please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Now is Eros International Media, actually the Indian listed arm as well as the parent. Now the shares are trading higher right now, about 5% higher, because the news that's come in is that Reliance Industries, through its subsidiary, is going to be buying 5% stake in Eros PLC. That's the international parent. And as far as the Indian arm is concerned, there will be a joint venture where there will be a combined infusion of about 1,000 crores. And of course, content sharing is what this is all about. We have with us Jyoti Deshpande, Group CEO and Managing Director of Eros International PLC. For more details, Jyoti herself will be migrating to Reliance Industries in a new role very, very shortly. Good to have you on the show, Jyoti. Now, before I talk about strategy, first things first, hygiene questions. I'm guessing this is an equal joint venture, in which case, how will Eros International, the Indian listed entity, bring in the 500 crores? I think the cash right now on the books is about 170.
So at the parent level, there's massive infusion of cash, and it's fungible. So Eros International Media Limited will have the resources to do what it's aiming to do. It's a market leader, and we're joining hands with one of the biggest players in the business, Reliance Industries. So I think content consolidation is here to come.
Right. So, I mean, Reliance puts money into the parent. The parent uses that money, as you said, cash is fungible into the joint venture, right? I mean, basically, that's how it's going to work. 500 crores from you and 500 crores from the partner.
No.
Go on.
No. So the money that Reliance is putting in is not to be used for this purpose. That's for a different purpose. It's putting money in the parent.
Right.
The group has enough resources of its own to fund this joint venture.
But if you could give us some more detail when you say resources, because as per the numbers that I have in front of me, current cash on the books is about 140 odd crores, 141 crores. And the debt right now is about 650 crores. So how will the 500 crores be arrived at?
So the current cash on the parent's books without the Reliance stake is already about $140 million. The parent always gives film advances to the Indian company, and the Indian company sells overseas rights, etc., to the parent company. So even without the 5% stake, the group already has in excess of 500 crores with it already.
Okay, so basically that cash could be the non-RIL cash, which was already there on the books with the parent. That can be utilized for this joint venture. Jyoti, let me ask you this. I mean, a bigger question before we come down to the actual content partnership. You know, a lot of shareholders of the Indian listed arm have been wondering, you know, what the larger game plan is, whether there will be some kind of a structural regime, whether there's going to be a merger of sorts, maybe a reverse merger with the international parent. Can you throw some light on this?
So, yeah, I think there's been a lot of talk on the cards that we need to align all shareholders' interests at one level. Right now, it's a stepped kind of a structure. So we are actively looking to see what we can do in that respect, where we align all shareholders at one level, whether it's a reverse merger or something like that. But early days. So I don't have more information to share.
But some timelines, perhaps? I mean, has this been considered by both the boards? Can we expect some movement, you know, maybe as the new financial year starts out? Even a rough timeline would help?
Yes, very soon we are going to sort of take concrete steps in this direction. Advisors are on board and looking at it actively.
Okay, but you can't... I mean, broadly, what will be done, you can't divulge? I mean, a merger, reverse merger, without going into specifics.
No, see, all these things are governed by huge compliances. So I'm not at liberty to share anything further on this topic.
Right.
But what shareholders can take away is that we are actively working towards aligning the interests of all shareholders at one level.
Could you tell us? I mean, so the reason many assume that the cash being put into the parent by Reliance is going to be used here, which is have said, well, it's not. It's the non-RIL cash which is going to be used into the joint venture. But what's what's that play at the parent level? The stake purchase there supposed to lead to? Because it's a small interest, they've got an in. Are we to expect more?
I think it's the beginning of hopefully a very long-term partnership. So I think it should send the right signal that it's a step in the right direction. So at the moment, there is no immediate use of the cash except that it nicely brings down the net debt of the group and capitalizes our balance sheet quite nicely. And gives us flexibility if we need cash during movement of structure, etc. So I think it's firepower that it gives us, and it gives us alignment more than the money. It aligns us to a very powerful partner. So I think that's what that move signals.
Okay, so just to talk about the India business now, because earlier there were a lot of reports whether you would be looking at a content partnership, especially for the OTT platform, maybe with an Apple, and there was a denial issued there. Now with this partnership with RIL, will there be absolutely no further sort of content tie-ups, and basically most of the content is going to be shared through RIL?
So not at all. I think that sort of limits the vision of what we're trying to do. I think the industry is quite fragmented, and the vision is to try and consolidate it, grow the industry together using Eros's expertise in the content space. So the idea is to make all kinds of content: Hindi, regional, films, original shows. Work in more long-term deals with the talent, etc. So think broad, think big. So it's not a limiting kind of a partnership. It's a very sort of blank canvas, wide partnership.
Can you leave us with some projections, Jyoti, since you're with us? How will FY19 look like? I don't immediately have the Q3 numbers, but it was a softish quarter for Eros International. What might we expect as this content partnership takes form in terms of revenue and EBITDA?
So I think scale is what you can expect. So organically, we would have grown at a certain rate. The numbers are out there. I think we can grow in the next year by another 15-20% because the slate will expand. We can double the slate with half the money. So I think it's a great outlook. It's a win-win outlook for both companies.
Okay, and one more question coming in from our team, Jyoti. It's something on everybody's mind, right? Because one of the other marquee media deals that RIL did was, of course, with Balaji, and now this is the next. I know it's early days, but any synergies, any kind of a three-way tie-up participation, is something on the table?
So I think so. I think we want to work with every content maker that's out there. Specific plans, what RIL has, I'll be able to share, say, post-April. So you call me then, and I'll be able to share what RIL's plans are. But wearing the Eros hat right now, I think the plan is to make as much content, compelling content as possible, keep content prices under control, partner, and try and grow the market, really.
Okay, but as Eros, you're not averse, or you don't oppose the idea of maybe some sort of content share. I don't know, I'm not going to talk about equity right now, but that's the next thing shareholders will start getting excited about. Maybe some kind of a money share deal, maybe a revenue share, or an equity share with Balaji. You wouldn't be opposed to that? And of course, we'll call you in April as well.
Not at all. Not at all. We are open to all kinds of ideas, all kinds of collaborations, not just with content partners, but with other OTT partners. So I think the idea is to put 1 and 1 together and make it 11. So we have a completely open mind and looking to work with as many partners as possible.
Okay, completely out of time. Love to carry this conversation forward, but we hope to do that in your new avatar in April when you are with RIL. Thanks, Jyoti, so much.
Okay, welcome back. Vaibhav Sanghvi is co-CEO at Avendus Capital. He's with us. Vaibhav, good morning. more downside to markets, according to you?
Good morning. No, I think, see, we've already been down about 6.5% for the month, and looking at the way how global markets are shaping up, I think the VIX is down from highs of about 35-40 to now about 20 levels, which means that there is some amount of stability, though not completely, but decrease in volatility and some amount of stability in the global markets. The only thing which the market is still worried about is the rising bond yields across the globe, and that is something which is monitorable. But at this point in time, on a shorter term basis, I think we are, more or less close to, stabilizing.
So Vaibhav, since you feel that we are probably close to some sort of a, a bottom here, have banks bottomed out?
Difficult questions would be, I think, again, in the banks, two big universe, right? In the sense that from a private bank, and in private bank, a retail-focused bank or a corporate lender, vis-a-vis your PSU banks as well. We have been consistent in our stand saying that we do like, or we continue to like, the retail-focused private banks. At this point in time, we will stay with that. A couple of quarters down the line, when we see the whole cleanup on these 180 days by the directive of RBI, we would be far constructive towards the broader spectrum of banks.
Where do you see, I mean, if the market were to, if upsides were capped, all right, where would you expect prices to continue to peter off, deteriorate? Maybe the large panic-led sort of phases behind us for now, but where are you seeing more damage, really?
No, I think now the damage would be more a relative or an relative underperformance rather than an absolute damage perspective. And that is how we will, have our short portfolio as well. Because we are, from here on, we are not looking at, absolute deterioration in stock prices or damage, especially and, after the huge amount of fall which we've already seen. In terms of sectors, we are still underperformer, are basically, some kind of public sector undertakings to an extent. Utilities is something which we still don't like. On the receiving end of the rising interest rates as well. So those are the sectors which we are not favoring at this point in time. But again, as I say, these are relative underperformance rather than absolute underperformer or shorts.
Vaibhav, in the last interaction, you did tell us that you'd started looking at IT a bit optimistically. And I mean, true to form, Q3 earnings season has been very good. We're seeing buying on a day like today as well. What are you picking in IT now?
No, the more we hear about IT, the more we hear about commentaries from the companies and as well as the spending pattern outlook from US and Europe. I think we are incrementally getting bullish on the space. At the same time, currency is something which is now starting to favor in terms of depreciation after the trade deficit data as well. So on one side, you are seeing increased spending, which we are bullish on. Two, currency starting to shape up. And three, the relative underperformance of that sector across the investment portfolios makes us believe that we are in some amount of good time in IT, at least for the medium term.
Vaibhav, thanks very much. Appreciate you joining us with that perspective, and we will speak with you soon again. Thanks indeed. 25 points on the Nifty, so for now things are stabilizing. Sun Pharma, I must point out, is also recovering a little bit. That was the big one which was cracking today in the large cap space. It's down 4.5% still, but it's 530 plus now. From Surbhi, me, everyone on the team, thanks very much for staying with us. Halftime report comes right up.